welcome to class. You're welcome to chapter 6 of this course. Now we are taking intangible assets. Intangible assets. What do you understand by intangible assets? When we say something is intangible, when an asset is intangible, when it cannot be touched, it has no physical presence. Okay, you cannot touch it, you cannot see it, but you can feel it. You can feel the value. Okay, so that's that. Uh, and you can control it. You can restrict order from the use. Okay, you can restrict order from the use, and you earn some benefits. You earn some income. You earn some reward. You have some gain on what on these assets. Okay, so such as brand. Okay, brand. We have trademarks. We have patent rights and the likes. Okay, so an asset is a resource controlled by the company as a result of past events and from which future economic benefits are expected to flow. Okay, so an intangible asset is what? An intangible asset is an asset in which what? In which it is identifiable, okay, and non-monetary asset without what? Without physical sub substance. Okay, so you as a result of past events, okay, you can control the resource, and as a result of what? As a result of past events, you enjoy future economic benefit. Okay, so future economic benefit comes from it. So an intangible asset is an identifiable non-monetary asset without physical substance. Okay, now how do we recognize an intangible asset? An intangible asset must be recognized if and only if it is probable that future economic benefits specifically attributable to the asset will flow to the company and the cost of the asset can be measured reliably. Okay, it's just as we recognize other assets, okay, such as investment property and property, plant and equipment. Okay, so the only difference is that these has was no physical substance, and it is a non-monetary asset. Okay, so measurements. How do we measure an intangible asset? An intangible asset must be measured at cost when first recognized. That's initial recognition. Okay, so then what are the means of acquiring what? What are the means of acquiring a intangible asset? A company might obtain control over an intangible resource in a number of ways. First, intangible assets might be purchased separately, okay, such as goodwill, patents, brands, trademarks and the likes. Okay, so they can be what? They can be purchased separately and they can be acquired in exchange for another asset. They can be what? They can be acquired in exchange for what? For another asset, and given it can be given to a company by way of government grants. Okay, it can be given to a company by way of what? By way of government grants, and it can be generated internally. Okay, goodwill can be generated what? Internally, uh, and also it can be acquired in a business combination. It can be acquired in a business what? In a business combination. Okay, so mind you, it is only goodwill. Okay, it is only goodwill acquired in a business combination that is what? That is recognized under IFRS 3. Okay, so any internally developed goodwill or internally generated goodwill will not be what? Will not be recognized. Should not be recognized. Should not be recognized. Are we there? Okay, now let's take it one after the other. let's take the internally generated intangible assets. An internally generated intangible asset is an asset created by a company through its own efforts. Okay, so an internally generated asset differs from an acquired asset that has been purchased from an external seller. For example, a publishing company may build up legal copyright by publishing books. Okay, so may build up legal copyrights. Okay, legal copyrights by publishing books. And then how do we recognize intangible assets? Okay, so now IS 8 prohibits the recognition of the following internally generated intangible assets. It prohibits goodwill generated internally, brands, mark heads, publishing titles, and customer lists. All these, if generated internally, are what are prohibited in accordance to IAS 38. However, if they are acquired separately, okay, or they are acquired through business combination or in a business combination, such will be what will be recognized. Are we together? Okay, so let's take this research and development. Research and development of intangible assets. The term research and development is commonly used to describe work on the innovation, design, development, and testing of new products, processes, and systems. Okay, they are used in what to describe work on the innovation, design, development, and testing of new products, processes, and systems. Assessment of whether an internally generated intangible asset meets the criteria for recognition requires a company to classify the generation of the asset into two phases, either as a research or a development. Okay, so either as a research or development. Now, what does the standard says about these two classification? If an asset, or if a research and development is just an ordinary research, okay, or is just a research on the internally generated intangible, how do we recognize that? And if it is a development, it is an enhancement, then how do we recognize that? Okay, so now let's take this one after the other. We start with research. Research is original and planned investigation undertaken with the prospect of gaining new scientific or technical knowledge and understanding. Research is the original and planned investigation undertaken with the prospect of gaining new scientific or technical knowledge and understanding. So examples of research activities include activities aimed at obtaining knowledge, activities aimed at obtaining new knowledge, activities aimed at obtaining new knowledge, then the search for alternative materials, products, or processes. The search for alternative material, products, or processes, and the formulation and testing of possible alternative for new materials, formulation and testing of possible alternatives, formulation and testing of possible alternatives for new materials, products, or processes. Okay, so now let's take development. Development expenditure or development is the application of research findings or other knowledge to a plan or design for the production of devices, devices, products, processes, systems, or services before the start of commercial production or use. Development is the application of research findings or other knowledge to a plan or design for the production of new materials, devices, products, processes, systems, or services before the start of commercial production or use. Examples of development activities include the design, construction, and testing of pre-production prototypes and models, and the design, construction, and testing of new materials, products, or processes. Okay, so these are examples of development activities. Okay, so now intangible asset acquired in a business combination. How do you recognize intangible asset acquired in a business combination? Any intangible asset identified in a business combination will be recognized as both recognition criteria are deemed to be recognized. As both what? As both recognition criteria are deemed to be recognized. So if what? If an intangible asset is acquired in a business combination, its cost is the fair value at the acquisition date, and if cost cannot be measured reliable, then the asset will be subsumed within goodwill. I take this again. An intangible asset acquired in a business combination should be measured at cost, and this cost is the fair value at the acquisition at the acquisition date. So if this cost cannot be measured reliably, then the asset will be subsumed within goodwill. Then what we mean by that is that the asset will be taken as a goodwill acquired through business combination. Okay, it will be subsumed to be what? It will be subsumed within goodwill. So then after initial recognition, how do you measure intangible assets acquired through acquired in business combination? Now you have the choice of policy. Intangible assets are recognized at what? At cost when first recognized. Meanwhile, the cost you are using is the fair value at the date of acquisition. Now the two measurement models for intangible assets after acquisition are what? Are the cost model and the revaluation model. Now using the cost model, you have your cost less accumulated depreciation. Okay, mind you, for intangible assets you don't have depreciation, but you have what? You have impairment. You have what? You have impairment. Are we together? So yes, you might be told by the examiner that what? The asset has been depreciated by so amount, or by so figure. Now that depreciation, you take it as what? You take it as an impairment. Okay, you take it as what? You take it as an impairment. Are we together? So cost less what? Less accumulated depreciation or impairment. Are we together? Okay, so this you do at what? At initial record sorry, at subsequent recognition. Then if you choose to use the revaluation model, the revalued amount less accumulated depreciation since the most recent revaluation. Revalued amount less what? Less accumulated depreciation since the most recent revaluation. Okay, so now let's take classes of assets. Class of assets under what? Under intangible asset. The same model should be applied to all assets in the same class. A class of intangible assets is a grouping of assets of a similar nature and used in an entity's operation. Yes, they are what? They are of similar characteristics, they are of similar nature, they are of similar use, okay, in what? In that in an entity's operations. Now examples of separate classes may include what? Brand names, markets and publishing titles, computer software, licenses and franchises, and copyrights, patents and other industrial property rights, service and operating rights, recipes, formula, models, designs and prototypes, intangible assets under development. All these are what? All these are intangible assets that are of similar nature. Take for instance, recipes, formula, models, design and what? And prototypes. Okay, so if you are into production, the recipes you use followed by the formula, the methodology you are using, models and designs, all these are what? All these are your critical success factors, and they are what? They are intellectual property. Okay, they are intellectual property to your organization. Are we together? So also intangible asset under what? Under development. Okay, now how using cost model to measure what? Using cost model. An intangible asset is carried at its cost less any accumulated amortization and any accumulated impairment losses after initial recognition. Oh sorry, here it should be what? It should be amortization and not impairment. Okay, amortization. Okay, amortization. Okay, so less what? Less any accumulated amortization and any accumulated impairment losses after initial recognition. Okay, and mind you that an asset is said to be impaired when the carrying amount exceeds what? When the carrying amount exceeds the revalued what? Exceeds the revalued amount. Okay, when the carrying amount exceeds what? Exceeds the revalued what? Revalued amount, and your revalued amount is what? Is the higher of the fair value and then value in use. Higher of what? Higher of fair value and value in use. Are we together? Okay, so using revaluation was using revaluation model. Okay, so an intangible asset is carried at a what? At a revalued amount. So its fair value at date of revaluation less any subsequent accumulated amortization and any what? Any accumulated impairment or any accumulated impairment losses. Okay, so that's how you revalued what? That's how you revalued your intangibles. Okay, after initial recognition. Now this is only allowed if the fair value, that is the evaluation model, is only allowed if the fair value can be determined by reference to an active market in that type of intangible asset. So in the case whereby the fair value cannot be determined with reference to what? With reference to an active or to an active market, then the intangible assets will not be what? Will not be measured at fair value. Okay. So now what is active market? An active market is a market in which all the following conditions exist. An active market is a market in which all the following conditions exist. One, the items traded in the market are homogeneous, and two, there are willing buyers and sellers, and these can normally be found at any time. Okay, prices are also available to the public, so no hiding prices, and buyers and sellers can easily be located or found at any point of time, and yeah, the items traded in the market are homogeneous. Okay, so how do we amortize intangible assets? Now a company must assess whether the useful life of an intangible asset is a finite useful life or an indefinite useful life. Okay, is a finite useful life or what? An indefinite. So an indefinite useful life is what? The asset will exist in perpetuity. Okay, it exists for what? For life, or we cannot actually determine when such assets will not be cannot be what? Can no longer be put to use. Okay, but while if a finite what? A finite useful life is what? Is a useful life that is known from the start of the what? Of the use of the from the start of what? When the asset is being put to use, like say 5 years, 10 years, 20 years. Oh, we can determine the useful what? We can determine the useful life when the asset will no longer be relevant for use. Okay, so or has no residual value. Are we together? So if the useful life of an intangible asset is assessed as being finished, then the company must assess its useful what? Must assess its useful life. However, an intangible asset is assessed as having what? Having an indefinite useful life when based on analysis of all the relevant factors. There is no what? There is no foreseeable limit to the period over which the asset is expected to generate net cash inflows. Okay, then when do we dispose of our intangible assets? The rules for the recognition of intangible assets are the same as of what? As for property, plant and equipment under IAS 16. The rules for the recognizing intangible assets are the same as for what? As for property, plant and equipment under what? Under IAS 16, accounting for their disposals. Okay, so how do we recognize that? You write off you write off an asset when it is what? When it is being disposed. You derecognize. You no longer what? You no longer carry it forward. Okay, the carrying amount will have to be written down to zero. So there is a gain or loss on disposal equal to the difference between the net disposal proceeds and the carrying value of the asset at the time of disposal. So where your net disposal proceeds is what? Is the disposal value less any cost to sale of such assets. Okay, so that's that. And your net gain or gain on this or loss on disposal is what is the difference between the net disposal proceeds and what and the carrying value of the assets. Are we together? So once again, mind you, the carrying amount or carrying value of an asset is what is the cost less the accumulated depreciation or amortization and the accumulated impairment losses, if any. Now, what are the disclosure requirements? Disclosure requirements of IAS 38. Okay, now disclosure requirement of IAS 38 is that the only additional disclosure we have compared to in addition to PPE is that what you have to tell the users of financial statements whether the useful lives of the asset are finite or indefinite. Okay, so if the useful lives are finite, the useful lives or amortization rates used should also be disclosed. Okay, and if the useful lives are indefinite, then the carrying amount of the asset and the reasons supporting the assessment that the asset has an indefinite useful life. Okay, if the useful lives are indefinite, you should disclose the carrying amount of the asset and the reasons supporting the assessment that the asset has an indefinite useful life. Okay, and for any intangible asset that is individually material to the financial statement, the following disclosure is required. For any intangible asset that is individually material to the financial statement, the following disclosure is required. A. Description, its carrying amount, and the remaining amortization period. Okay, the description of the intangible assets, the carrying amount of the intangible asset, and the remaining amortization period should be disclosed. Okay, are we together? So the total amount of research and development expenditure written off as an expense during the period must also be disclosed. Okay, the total amount of an intangible asset, the total amount of an intangible asset that is research and development expenditure written off as an expense during the period must also be disclosed. Okay, now that's that. Accounting policies for intangible assets. IS1 requires the disclosure of accounting policies used that are relevant to an understanding of the financial statements. There are several areas that are important to explain to the users of financial statements. One of which is what is the amortization policy adopted. Now, the depreciable amount of an intangible asset must be written off over its useful life. Okay, the depreciable amount of an intangible asset must be written off over its useful life. That is, at the end of its useful life, if it has no scrap value, okay, it should be written off to zero. So formulating a policy in this area involves estimating the useful lives of different categories of intangible assets. So secondly, the development expenditure. Does the company have any? So if the company have any development expenditure, then you choose to capitalize your development expenditure. So you only expense that in an exemptional cases, that if the development expenditure does not meet the 5 criteria stated under IAS 38. Okay, so the intended use or sale of the intangible asset. Okay, if there's any market, okay, if availability of market, the reliability, okay, that is if it is probable that the asset will generate a future economic benefit to the entity. Okay, and the entity has capacity to complete. Okay, they has the capacity, they have the intention to complete the intangible asset that will be readily available for use or for sale. Okay, so and another one here is that intangible asset acquired in business combinations in the period. Okay, so and we have what we have whether the company has intangible assets whether the company has intangible assets assessed as having an indefinite useful life. So all these should be what? All these should be disclosed. Alright, together, all these should be what? Should be disclosed. Is that clear? So at this point, we've come to the end of this chapter, and we meet in the next class where we'll be discussing other parts of this course. Thank you and have a wonderful break. Goodbye.